Good Wednesday morning, Market Chameleons, and those joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I at Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. Provide you with advice, give you guidance. There's our disclaimer.
Excellent.
And I'm going to share my screen. While I'm doing that, if anyone's joined us for the first time, Will and I, we do these shows to help answer questions you may have about the Market Chameleon tools, the data or analytics. If you want to ask a question, you could come on live and ask your question. We do provide a link to Zoom on the live chat on YouTube. If you click on that link and it takes you over to Zoom, once you're in Zoom, there's a button at the bottom of your screen. It says raise your hand. Click on that. You could ask your question live. If you prefer to type your question, you can type it into the live chat on YouTube, and Will's monitoring it. He'll read them back to me. In the meantime, while we're waiting for more people to join us and questions to come in, we'll start out taking a look at the pre-market report to see if we could get insights on what's trading in a pre-market hours. Then we'll move on to questions. And one couple notes here. We're not doing the show tomorrow morning. We've got some things we wanted to take care of that has to be in the morning that conflicts with this time. So we're going to skip tomorrow, start up Friday. And next Tuesday, we're doing a webinar with Interactive Brokers. Interactive Brokers is hosting it. We'll talk about some advanced option strategies, how to set them up, how to evaluate their potential risks and rewards. So that's going to be on next Tuesday at 2 p.m. Eastern with Interactive Brokers. And you have to register with Interactive Brokers. They're hosting it. It's not going to be live on YouTube like these shows. So once you register, you'll get a link. You can join us. And if you miss it, they'll send you a replay.
And I'll put that link in the chat.
Yep. Yeah, we'll try to remind people as we get closer to it, again, about that webinar. So let's start out taking a look at the pre-market report. Well, and then if anybody has questions afterwards, let me know. We'll start taking the questions.
All right.
Sound good? All right. So pre-market report, these are stocks trading in the pre-market hours. I'm going to come down here. We have a list of our most active stocks, biggest percentage gainers, biggest percentage decliners. And here I see 54 stocks made our percentage gainers list, 214 stocks made our percentage decliners list. And to make this list, they do have to meet certain thresholds that we have in place regarding, volume, movement, activity in the pre-market hours. But right now, from this perspective, it does look like we're setting up for a bearish bias at the open. I think also some of it may have to do with Fitch downgraded U.S. debt to, I think, from AAA to AA. So I think right now we have two rating agencies that are giving the U.S. debt a AA rating, correct? S&P 500, S&P and Fitch.
Yep.
So we'll see. I mean, I don't think nobody thinks that the U.S. will default on their debt, especially because they have the ability to just print more money. But yeah,
well, I've had my brother here for a week, and he's heavy into the crypto.
Yeah.
So he's got a whole rabbit hole that you can go down in about the printing of money and the life cycle of that. So
it's not a actual sustainable strategy just to print more money when you need it. That would be irresponsible. But
yep,
that's there as a measure because if you can't print more money and you owe that money, you're going to default, right? And you don't have it, but they do have it, but really, if you go to the Federal Reserve and you read about the dominance of the dollar, and I think since World War II, really the dollar dominated the world's reserve currency. I think it was like, maybe it started after World War I, then World War II happened because of what's going on, all the wars in Europe. From that point on, the US dollar really dominated the world's currencies.
Yeah, but the dollar was pegged to a certain amount of gold up until 71, right?
Right, exactly.
And that's the big difference. Since then,
So we
the
don't have
debt and the amount of money, has gone up significantly.
so we don't have a lot of history off the gold standard. I mean, it's a lot, but we're not like hundreds of years or anything like that. So or even 100 years since we got off the gold standard, but we've been a bit benefactor of a strong dollar. And the Federal Reserve themselves admits that one of the key roles of the US dollar to remain dominant is that it's a storage of value, right? So if you hold the dollar, then and you think that in the future you're not going to lose your purchasing power, right? So if you're holding the dollar today, you put it in a bank, you earned it, you worked for it, right? You're storing that labor, and you think that you could purchase something in the future, not lose that purchasing power, then that is one of the key roles of the US dollar maintaining its dominance. And with inflation, what we've seen is that becomes questionable. And like, from my experience talking to a lot of people who aren't not even, I would say, in the financial system, but just regular people who rely on the financial system, but not necessarily know all the plumbings of it. More and more I hear that I need to diversify out of my savings because I'm afraid of my purchasing power. I'd rather just buy something today, either a house or a car or a trip, because in a year or 2 years from now, the dollar is going to lose its value. I don't know if you're hearing that, but I do hear that more and more and more from people who are worried about it.
Yeah, I think so, for sure.
Yeah, especially after the last couple of years. We've been already, how long are we into this inflation at this point? Since COVID. So we're heading into like almost like year number 3. In the beginning they were telling us it's transitory, then it was then we're in a period of deflation. We're all these things that they're saying, but at some point people are really genuinely worried that what's going on here. Even though these numbers are coming out, it doesn't feel that way to most people, right? It doesn't feel like that inflation is under control and that they're very confident in it. And that could become a problem as well, because it's inflation expectations, right? It's if people start to worry, their behavior changes, right? Your inflation expectations, that's what your behavior starts to change based on your perception of the future. So anyway, just wanted to start that conversation since we got a downgrade today in the US, US debt. Up here, I'm just going to scroll up here. And this is a different view of what's going on in the pre-market hours. And this is kind of a history day by day, kind of a calendar view up here. And then you could go back. So it gives us like the most most recent 5 days. We're right here on August 2nd. This is what's going on in the pre-market hour from a high level. And if we just looked at everything, we see that there are 247 stocks that had a trade in the pre-market hours, at least one, right? Or traded, they could be actively trading or at least a trade. And 247 of those stocks traded higher than the previous day's close, right? 654 stocks in the pre-market trading lower. If we took the number of shares, just the volume, 127 million shares traded on up volume versus 98.9 million on down volume. So there could be stocks in there that are trading, a lot of volume, right? Versus many that are not. So the number of volume you can see is tilted towards the up. But if we converted this volume to dollar value, right? Because some of these could be penny stocks, dollar stocks, so not every stock is the same price. If we converted it to dollar value, $823.9 million worth of stock trading on up volume versus $3.8 billion on down volume. So in notional terms, we see that we are setting up for bearish bias so far at the open. Okay. One more thing we could do while we're waiting for questions to come in is when we're looking at this list, these 3 lists of stocks, you'll notice that there are small cap stocks in there. We have ETFs listed in there. It could be a preferred stock, closed-end fund, leverage product, anything that's trading on a major U.S. exchange. If it's trading in the pre-market hours and it meets our thresholds, it could make this list. So to narrow down this list to a smaller group of stocks, we could use the filters here up top. And I'm going to start out with this one, an ETF. Click on that. You get a drop-down menu to choose from. These are different ETFs. Some of them are sector-based. Some are broad-based ETFs. Let's pick this first one, SPY. That's the S&P 500 ETF. When you click on it, it will start filtering out this list. I think I had this up too long. Let me refresh my screen. So when you use that filter, let's just go back. I don't know why I'm so let's do that again. So I'm gonna click on that. Let's pick SPY. When you click on it, the list below will get filtered by stocks that are holdings in the SPY ETF. All right. So here we see 6 stocks made our percentage gainers list, 40 on our decliners list, and these are S&P 500 stocks. So here we are looking like a bearish sentiment at the open. All right. So if you have questions now, Will,
we did have a bunch of questions pop up, D.
Okay.
First one popped up on Zoom, but it also hit YouTube, and it was from Ravi. And he's, I think he may be a new user. It's, good morning. How can I use the platform to do technical analysis? That was it. I don't know if he's asking, is there any place on the platform that displays technical analysis or maybe what's going on? But that was his full question. Good morning, everyone. How can I use the platform to do a technical analysis?
All right. So first of all, when we talk about, technical analysis, there's so many different technical analysis that you could do, probably like thousands of different indicators, right, of technical analysis, moving averages, and all these things. We do not specialize in technical analysis per se, right? So that's not what our website does. We don't really try to use technical analysis as a way to analyze a stock's or to evaluate a stock, right? So looking at a previous chart to, what does technical analysis try to do? Either give you like an indicator or predict like the future, because most technical analysis, for the most part, is trying to use time series analysis to predict future, right? So they're saying if this is how, stock moves, then this is how it'll continue to move. And we don't really use technical analysis. We use historical data as inputs into models, and those models try to answer questions. And it could be an evaluation model. It could be a model that produces some kind of a future outlook or forecast, like say of a dividend or earnings announcements or potential earnings movements. But if you're just looking for charts, if you're just looking for reading, something like let's see. If you're looking for just like lines on a chart, there are lots of different softwares out there that can do that for you already. We don't specialize in it. That's not our approach to answering questions or building financial models or trying to calculate probabilities, price valuation. That's not our specialty. We probably are better off looking for somebody who specializes in technical analysis, exclusively. Wait, well, I think you're.
All right, there you go. We had another question from, let me go back to the questions. It was from MW. I had a question. What's the best way to check probability? I think it's probability of profit when you build but it's probably of profit when you build a multi-leg strategy in the option calculator. By the way, Mike and Gene said they've been watching your short videos and really like them. So
thanks, guys. Yeah, thank you. Yeah, that's what I've been trying to do, is make them shorter, like trying to answer maybe small, a very specific question to see if that, doing them shorter videos rather than longer.
Now those videos, for anyone who doesn't know but are available on the Market Chameleon YouTube channel. So just go to YouTube, type in Market Chameleon. I'll put a link so you can, if you haven't registered, I'm sure if you're a registered member of the Market Chameleon YouTube channel, you get a little notification, but they're all available for everyone, even if you're unregistered.
Yep. Thanks. And so when we talk about, I'm going to do from an options chain. So when actually here, go to the trade ideas, and here are trade idea cards, and this win rate, right? I think that this is the historical win rate, or historically, if we're trying to calculate the probability that if we do this strategy, so in this case, September 1st, 454 put, if we do this strategy with X days to go at the market price, what do we think is the probability that we will profit from this strategy? Any profit, right? That means that at the end of expiration, right, it will be worth more than $4.49, this option. Okay. So let me go to the paint. Let me try to paint this scenario for you guys. So when we need to run, right? How do we calculate that? Well, we need some kind of financial model to help us answer that question, right? Because nobody tells you that, right? There's no, you cannot call, the New York Stock Exchange or the CBOE and say, hey guys, can you give me all the probabilities of all these profits? And so there's no such thing, right? You cannot go and find a table or a list that gives you the probability of profit, right? What is, is it 10%, 50%, 90% chance that it will become profitable, and what is it worth, right? So there are two things. What do we think it's worth, and what's the probability that it will hit? Okay, so these are two things that are important to know. What is it worth? What do we think it's worth? Is the value, right? And then, what is the probability of profit? So these are two different things that you want to answer, right? Because there could be a high probability that you will profit, but you're doing it for a price it's not even worth, right? Like, for example, if I have a wheel with 10 numbers, right? Let's say I have a wheel with 10 numbers. Let's just say, 1, 2, 3, all the way up, to 10. Right. So look at this. Let me just show you something. If I say, if we play a game and any number lands from 1 to 9, I give you $1, right? So if I do that, then your probability of profiting is 90%, right? 9 out of 10, you're going to win, right? So that's your win. If I give you $1, but if it lands on 10, right? What if it lands on 10? You give me $1 million. Does that seem to you like a good strategy, even if you're winning 90% of the time, right? Because you know that 1 out of 10 chance, or 10%, if it lands on there, you're going to give me $1 million. Would you do that? Well, it wouldn't make sense. I hope you wouldn't do that. I hope it makes sense that you shouldn't do that. So what is that bet worth, right? And then you have the probability of you winning versus losing, right? So you could see here that the probability of you losing, or the probability of you winning, if you bet on $1, is high, 90%. But you shouldn't make the bet because it's not worth it, because your expected value is negative. You're gonna lose your shirt, right? So those are important things to understand. So, but how do we know the probability, these probability? Like, how do we know it's even in a stock or an option? It's not given to us like a wheel, right? There's no like 10 outcomes, and these are all your potential outcomes, and then you could figure out your probabilities, right? That's not given to us. So we need to create a financial model that estimates it, right? We need to now estimate these probabilities, right? And that's what models do. And models are not perfect. They could only be practical, because we cannot know exactly. We could use historical data to create, well, as a guidance, these are what we believe, the odds are, right? The probabilities of a profit. Okay. So just like an insurance company, they cannot tell, exactly odds of somebody getting sick, getting into an accident, or dying before 50, or they don't know the exact, year from year, it's not exact, right? It's not exactly the same amount of people. It's not exactly, this exact profile there, but you're estimating through a model which have errors, and you want to try to evaluate your models over time to see, if you could get those errors lower, right? So there's an evaluation process. But if we wanted to see that here's a stock, here's a stock, it's $100. So a simple model would be, I have a stock at that's $100 with 10 days to go. All right. Oh, sorry, I got a lot of space in there. Let's say 10 days to go. You have a call option that is $1, right? So in 10 days, this stock has to go up. What does it have to do? It has to go higher, go up by more than 11%, right? It has to go, sorry, did I miss call option, with the 110 strike, right? I forgot the strike, $1. So it has to go above 111. So if we start out at 100 and it goes above 111, that's more than 11%. It has to go up by more than 11% with 10 days to go. Now, so how do I start building this model? How do I know what the probability of that happening? All right. I don't know. Who knows? Nobody knows for sure. And those are not given to you. It's not like a dice, right? It's not like a dice that says in 10 days, these are going to be the potential outcomes. That doesn't happen. So next best thing is we could go back in history and say, well, show me 10-day periods of this stock, right? I'm going to start narrowing down my data. I have to answer the question. If I want to try to answer the question, I have to now clean my data, figure out in the next 10 days what's going on, and then start looking at data that's similar, right? If there's an earnings, I got to go find earnings data. I have to find situations that are similar and then look back and say, well, how often, in the last 2 years, 3 years, 4 years, how often did the stock go up 11%, right? So I use the historical, data, to create probability distribution, right? How often did it go up more than 11%? Now, remember, this isn't saying what the value of the option price is. It's just saying how often did it happen, right? We will have to calculate the value separately. And, that's what this is, right? That's what this is going back in time and saying, find me similar situations to say, well, how often does this even happen? Without knowing any information, if we don't know any specific information to make us believe it's going to go up or down, right? Because if we do, we should feed that into our model. But without having any specific information, if there's all these unknowns, what is the historical probability of this even happening? How frequently does it happen? So that's important to understand, is that we're running a model to create estimates because we don't have hardcore objective numbers. That's how financial models work. We need to try to answer the question in a practical way, using related data. All right. Does that answer the question, Will?
Yeah, no, that was good. But we could hit on it tomorrow. If you have more questions concerning the topic, email support@MarketChameleon.com.
Yeah.
We'll get it tomorrow.
And how it would look from the options chain. Sorry. So I think that it was like, what was the question? Was it a specific strategy?
No, it wasn't a specific strategy.
Okay. But if
we're right up against the half hour. We did have a question. So if you do want more information on that, you can email us at support@MarketChameleon.com and we'll hit it tomorrow. Douglas,
or Friday, or not tomorrow.
Or excuse me, Friday. Sorry, we're off tomorrow. But Friday. We did have Douglas asked, and I'll copy an email so we do have it for Friday. Please ask the significance of a block option floor trades as opposed to electronic options trades. I've noticed that stocks with even a small percentage of option floor trades seem to be moved faster. So maybe we'll discuss that on Friday, or anything else that's emailed to you for questions. D, great job as always, my friend.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day. Hope to see you guys Friday.
We'll see you on Friday, everyone.